So guys, I believe I am now streaming it live. So first of all, before any further ado, the disclaimer here suggesting that all content presented here is purely for educational purposes. I'm not soliciting buy or sell. But if you do go on to use the views presented here, you yourselves will be liable for your profit loss, loss of profit, and any other kind of loss, emotional or whatsoever the disclaimer may cover. So now that we are done with the disclaimer, very quick introduction. My name is Nirav. I'm the admin owner of this website 50 Eyes Market Analysis, where I publish my views on monthly basis via live webinars, just like the one you are seeing. I am an expert in Elliott Wave and I hold a track record of 6 years with exceptionally high market beating unmatched accuracy of 80% plus. Yeah, I have to boast a little bit about myself here. Right, so my track record is public and hence anybody can just go to this link and check it for themselves, 50s.com/forecast accuracy. I'm also the author of this book called Think with the Markets. It is it is available on Amazon as a Kindle version, so it will be getting electronically delivered if you decide to purchase it. Here I discuss some of the proprietary methods which I have developed over the years and how I apply them. So it's a completely practical hands-on book with the actual example in it. So I believe that would be all for the introduction. Now getting back to the actual agenda of the webinar. So in the webinar, we will be discussing the charts of crude oil, gold, S&P's 500, Bitcoin, Nifty 50, and if we get time, maybe some more charts, but these are the main charts which we cover every webinar. The way I will proceed is, first of all, I will tell you what my view of this market is, which is on screen. And once I have told you what my view is, then I will ask questions. So if you have any questions, then you can then post them in the comment section. It goes for all the audiences on TradingView as well as what do you call YouTube, and lastly, obviously, my private audience, right? So that's that. And yeah, one more last quick thing. If you want to receive notifications of when this webinar will be conducted and get to join and want to join my private session, which is the private audience which I directly interact with, then you can click on this subscribe emailing list link on my website, email subscription basically over here. And you can fill in your email details and I will make sure to send you an email whenever the next webinar is conducted. So that's about it, guys. Just give me a confirmation that if you can hear and see the screen and hear my voice, and then we will proceed with the webinar. David is saying true, silver and lithium could be interesting charts. So lithium, I am not tracking. Silver, let me just see. Actually, I haven't checked it in a while. I'm just tracking gold, but maybe I'll just quickly open it up and see. They are mostly correlated. So let's 1 second. Case. Put my phone on vibration here. Okay, so I see that the audio, video, everything is visible. So let's start off the discussion. First of all, what we have on screen is a chart of NYMEX crude oil, and I believe we have a holiday going on. So next session, I mean, let me see my calendar update. So NYMEX, I think Monday is a holiday for NYMEX. So anyways, whenever the next session opens, our analysis will be applicable. So first of all, this is our, let me go on the right time frame. Okay, so this is our point of reference. That is the point we are interested in discussing this market, right? So which is the level of something like $130 something. So NYMEX futures chart 130 is our starting point of reference or discussion. And my current view is that this market is going for a WXY kind of correction. So in that sense, we are seeing a W here, which is at the level of something about 93. X correction here, which is still under continuation or most likely complete around the current level of 106.54 and should be followed by a down move, right? So there are some nuances to it which we will discuss, but for the people who are not very much familiar with Elliott Wave, I'll just go and discuss what a WXY really is. So in Elliott Wave terminologies, WXY is considered a complex correction. It consists of 333. So basically 3 legs down, followed by a 3 waves up, and followed by 3 legs down again. So the first 3 legs down is called a W. The second, which is this part, which I just drew the box on, is called an X. And the last 3 down is called a Y. So this is also called a double zigzag correction. But in this case, it's not necessarily a zigzag. In this case, let's just go with the complex terminologies because the first leg could be considered an expanded flat. I don't want to expound too much on it. It might confuse some people, but just adhere to this drawing I drew on the right hand side. 3 legs down, 3 legs up, 3 legs down again. So that's my view on next leg down. David is saying that's good, David. So now the discussion becomes, is the X complete or is the X continuing? That is the only thing we are interested in at this point, right? So to check that, what we will do is we will discuss this part. So this will become our new point of reference, the level of 93.91. We don't really need to go to lower time frame. This one is quite clear in itself. So I'll just zoom in and show my counts here. Actually, I don't even need to show the counts because it might confuse some people who are beginners. But anyways, if you want to take this count in on your charts, you can just pause the video here later on in the recording and take it. Anyways, going forward, I believe that we have a ABC correction to the upside, right? That means that we have flat correction basically. Again, I will just draw the rough indication of how a flat looks. So 3 waves in the upside direction as an A, B, and C. 3 waves in the downside direction again as an A, B, and C. And then 5 waves in the upside direction as 1, 2, 3, 4, and 5. So that's what a flat correction looks like. In this particular case, I'm taking this as an ABC up, and corrective down is here. And the next leg, which is the interesting one, or the one which we are really interested in, that is a 1, 2, 3. 1 second. We have 1, 2, 3 here, 4 here, and 5th here. Now, interesting enough, we were able to capture this leg up. So let me just show you my private Slack group. Let me hide the drawings for a second. So this is the private Slack group on April 11th, expected progression. I'll just open the chart here. So this was the expected progressions. We were expecting the market to move higher, and then we expected it to go lower. Let's see what happened. Picture perfect on April 13th. I have posted it here. Let's see. So it did go higher, right? And it actually literally did everything we were thinking. It even did go up for the last wave 5 up, right? So far the analysis is working perfectly, like picture perfect for us, for our own trading. And let me go back to the actual chart. So that was just to show off that I am a real trader and I do take trades on my own, and they are posted live, analysis, trades, everything. Getting back to the topic of a discussion, now the only point of interest we have is this C leg complete or not? As I said, this is the A up, this is the B down, and this is C up. And as I said previously, this is a 1, 2, 3, 4, 5, right? So if this is a 1, 2, 3, 4, 5, then we can theoretically and practically assume that it is complete. There is only, however, one possibility which can go against us, and that possibility is that probably this market is going still up for the C, and this is just the one of a higher degree. I think you get my points if you understand the fractal nature of Elliott waves. So basically what I would mean, I will just draw that. It will be 2 here, and this will be 3, 4, and 5. So that is what is the second scenario that can happen here in this market, right? So now that we are aware of both the scenarios that can happen in this market, let's strategize what we expect from a trading perspective. So first of all, the impulse is rather very clear. The 1, 2, 3, 4s and 5s are very clear. So the first thing is I will look for short-term selling opportunity here, right? Because the fact remains that even if it is still continuing for the wave C up, it should go down for this wave too, right? So from that perspective, I believe we can look out for some shorts. One second, there's one possibility I missed out here. Hmm. I just realized that it is possible if the market is severely bullish that the first leg completed here, second is already complete here, and because this is so strong, we cannot what do you call ignore the possibility that this strong leg is actually the 3 in progression. So that's a good catch, and that means it could straight away go up. So short term selling opportunities will have to come only once we break the low of 1 or 2 on this NYMEX futures chart. So, and the thing is that if this arrangement is in place, then it will not break the low. Now here I'll just go into a little bit of what do you call hypothesis analysis. Again, these kind of things which I'm discussing here in this webinar, like point of reference, creating multiple hypotheses, I have expounded in great detail in the book, which is Think with the Markets. So if you want to know more on it, definitely check it out. Getting back to the actual discussion, if this is the possibility that this is actually in wave 3 is in play, then we don't expect the market to go lower than 102. So if it goes lower than 102, then the possibility becomes that actually the 1 is here and this is the 2. Now, but below 102, the other odd thing or the other problem which arises is if you go short here, you don't really expect too much downside, right? It is possible that the market just gives an A, B, C, just going below 102 a little bit and then reverses up for the much stronger 1, 2, 3, 4, 5. So keep that in mind. Shorts are definitely possible here, but you will have to analyze this market on a much shorter time frame to catch this expected possible wave 2, right? That's one thing. Let's just call it as our hypo one, that shorting is going to be an option below 102, but the downside is very limited, so your shorts will be risky. As a matter of fact, if it does go down in 3 waves and then goes back, then the better opportunity will be to go longs above the high of wave 1. So that's one way to trade this market, or one strategy we will apply on this market, or one view of this market. Second view is, as I said previously, that the C is complete. If the C is complete, then we should see a strong fall here, nevertheless. And if there is a strong fall, then generally from what do you call conservative perspective, you will wait for 5 legs down, then 3 legs up, and then again a new drop. But I personally don't wait that much, because if you wait that much, the trading opportunity is already gone. So, but anyways, if the market does do the C completion over here and then falls, then we will be looking at something like this, roughly speaking. And in that case, again, our trades will start to get triggered around 102 or below 102. So again, uh, it's more of what you call short side bias, with the considering the possibility of uh, wave C still continuing in mind, and hence strategizing accordingly. So if I were to conclude this discussion, I would say that this is a swing short with the possibly you can take the shorts like 5-10% of your positions right away. Let's say if you take 10 lots as a trade on this market, you can take 1 lot short right now, right? And as the market progresses, you can accordingly add more shorts or reduce your shorts. That is basically all I have to say for crude oil. What do you guys think of it? Is there any doubt? If there is, please type it in the comment section. If there is no doubt, just type clear. And all platforms are clear would be welcome. Trading view and obviously the private audience. Just typing clear if you are clear, or if there is a doubt, just type that in. Harold is saying clear. David is still typing or not. David is also clear. So what about the other participants? I see Prabdeep is still there, and Rashid is also there. Okay, what about the guys on TradingView? I see some people are online. Are you able to listen to me? Are you understanding whatever I'm discussing on these charts? Do let me know. Deep is also saying clear. So that I believe is clear enough to all the participants. Yeah, one more thing. If we were to look for the targets of this leg down, which we are discussing, then generally we expect the A and C to be equal. But in this case, I don't want to go that deep because that would imply that more downside, like bigger downside is in play. So what you can do is you can take this measure and project the 61 dotted of it from the end. So I'm not going to project this because we don't really have a confirmation right now if this is the wave C. But if this was, so let me project it. So if this was assuming the end of wave C, then our targets will be somewhere around the level which I've already marked, 84.90, 84.78, or whatever this is level is, right? So I sort of have already this marked out through some other analysis of some higher time frame, but this is the minimum expectations we have. Generally, the bare minimum is that it will break the last low, but more or less the market almost always goes lot lower than that. So that is the one simple target, not a concrete target that we need to keep in mind. Again, keeping in mind, we don't really know if the C is ending here, it has ended here, or it's continuing like this. So that's it for crude oil. Let's now move on to gold. And as I can see, the Russian markets, this is the RTS, Russian Market Index. So it is now, 1 second, 18th April 2022. This is 13th. Okay, so it is now in play. And the analysis which we were having on this one is that we had a wave C down. So given the fact that there was a major spike here, this could be the end of the whole thing. However, I'm of the view that this is not still a long, because generally what happens when a market falls this sharp is that it generally forms a consolidation. Let's say sort of a, 1 second, sort of a triangle pattern, and then gives one more leg down before going up. I've seen that happen a lot on stocks. And this is, since it is a stock index, it is a possibility. So anyways, I can't expound too much on it. We need a little bit more data here. But one interesting, not interesting, very, very interesting fact that I like to point out is generally we look for 61.8 retracements when we are drawing Fibonacci, right? 61.8618. So very interesting enough, I have drawn 618 here. Can you guys see it? 618 here. Anybody from the comments? That's alternate kind of application of Elliott Wave, which I'm showing here. Okay, David is saying, yep, Pradeep is yep. So it is respecting the important golden ratio of 618, not by doing it as a fib ratio, but by actually going to the price level. So this is the thing which I have observed in many stocks. As a matter of fact, I predicted the reversal of Bitcoin much before by just saying that based on one of the main facts that it was near the 61.8 ratio and there was some reversals forming. It actually reversed from 61.8 or near 61,800 levels. Near. It did form some spikes there. Anyways, interesting fact I wanted to throw out, alternate application of fibs. Pradeep is saying it's crazy. BT3V reversal was the same level. This is fascinating. Yep, that is definitely fascinating. As a matter of fact, let's just touch up on that thing. Yeah, there it is. So you can see this big, strong red line, right? It is 61,800. Again, a yes from the audience would be nice, because after this, I'll show you something even more interesting. Okay, there's a yes. Now, if we just jump to the weekly, you'll observe something. Now look at the same line. The market never closed above it on the weekly. Again, couldn't close, again, couldn't close, again, one close. And then the next week it saw a sell-off. So it is literally clear that this level meant something for these traders. and hence it is basically sort of common knowledge again in what you call prop traders and professional traders that this level is important. So I have seen this behavior in many other markets, but these are the most clear ones. So I thought I'll just point them out. Interesting, right? Yes, David is saying strong resistance. Yep, that's a psychological resistance level. Anyways, let's move on to the progression. We are now going to discuss the gold chart. Let me see which one I'm following. This one, yeah, this is the one. So gold, A, B, C, D, E, 3, 4 triangles. Okay. So gold is again having sort of a clear, not a direction clear bias, but a trading wise clear bias. So let's see what that bias is. First of all, I believe that we have a corrective leg down here from the point, one second, A, B, C, and then the correction. Okay, so the point of reference is around 20,000, 2077 something. And this is CFD data, so futures price levels will vary a little bit, but not way too much. Anyways, I believe that this is again the classic sort of example of a possible flat correction where we have 3 waves down, 3 waves up, and then 5 waves down. So in this case, over 3 waves down and over here, 3 waves up and over here, and the 5 waves down are possibly complete here or still continuing. So if you guys remember, this is the same case as the case of crude oil, but in the reverse direction. Are you guys catching my point? David, Harold, Pradeep. It is literally the same case, just in reverse. Okay. So anyways, just for the audience which is not very much familiar with Elliott Wave, I will just expound on it a little bit. So the case is simple. We are under the impression either the C is complete here. If not, it has 2 more legs remaining to the downside. So that is basically our analysis. So the setup is also very clear. If it really does go, let's say, near the last lows, then we sell. We sell with the stop loss, let's say, over the whatever the last swing high is, right? So this could be, let's say, if it reverses from here and goes straight down here, then this could be your entry and this could be your stop loss. So very, very clear setup, right? On the short side, it is clear. And on the long side, again, if it takes out the last high, then we will have to assume that possibly the C is complete. There is one other possibility. I will not dive into it too much deep. That possibility suggests that the upside will be there, but it will be limited in price. But we will see it as it goes. We don't want to discuss every complex detail right now. It might become confusing for some people as well. So getting back to the actual discussion, short side setup is very clear. Long side setup is again very clear. And the reason is that this analysis is quite clear. And one more fact, I believe that shorts are sort of looking favorable at the moment. Obviously, as things go on the next session, we will see how it goes. But right now, it is looking more like that because this price action looks very corrective, sort of messed up, choppy. So that's why my view is that I am favoring the bearishness for now. Obviously, trade setup will obviously help us out. One more very, not very interesting, just one more thing I just wanted to point out. In the last webinar that we did, I was able to spot that there will be a leg up and then a leg down. So we were basically able to spot that there will be an up move for a wave 4 and then a down leg for a wave 5. And it exactly did that. If you want to check, you can check. The recording is available on YouTube as well as TradingView. All were live webinars again. So our last analysis did play out precisely. And I don't want to expound too much on it. It is rather clear analysis. If there is any doubt, you can just type in the doubt or we can just move ahead with the next chart. Yeah, definitely type in clear if you are clear. Pradeep is saying clear. What about David, Harold? Generally, I do get some participation from TradingView, but today it is very bleak. Maybe because of the long holiday on NYMEX. Okay, so everybody is clear in our private webinar chat. So let's move ahead with the next thing. 1 second, guys. 1 second. I'll just quickly check. Okay. So next chart is of the S&P's 500. Which one are we following? Let's see. So I believe there was a long setup. When was the last webinar we did? 1 second. Let me just quickly check that. Subscribe Elliott Wave training program. The last webinar we did was 34th applied Elliott Wave webinar plus book launch. Let me check the date. So the date is 20th. Okay. Yeah, guys, one thing on the book is called Think with the Markets. I did a separate private webinar, which is available. Where is it available? Yeah, if you go to the website, Think with the Markets, and I think somewhere here I posted the link. I should make it much more clear. Yeah, there it is. Think with the Markets exclusive webinar. So this webinar was very interesting. Honestly speaking, I even watched it myself. It was like the concepts on video obviously looked better, and also I have the charts on full screen, so the explanation is good. So those of you who are more on the video side of things, they can just go to Think with the Markets and check out the webinar. I have to mention it is a paid webinar, right? So that's there, and it was interesting. You will like it if you are into Elliott Wave and if you have been following my work. Honestly speaking, it was good, and the pricing is also very convenient. I believe everybody can afford it at $100, which is the current price. So getting back to the discussion, we came here to check the date. The date is 20th of March 2022. 20th of March 2022 means this was the long trigger which was discussed beforehand, because this long trigger is around 17th, 18th. Okay. So maybe the longs were already triggered and it was discussed in last to last webinar. Anywho's, leaving that outside, what the current view I hold on this market is, there were actually two views. Let me quickly check them. Yeah, there it is. So first view we have on the S&P's 500 is that this is our point of reference. Level is 4823. This is what is it called? CFD chart, right? And one of the two views, or the one of the two hypotheses, is that we possibly are seeing a leading diagonal here. And if this is a leading diagonal, then this is the three-wave correction which comes after it, and that would suggest another leg down, right? That's our not main, that's one of the views. So in that sense, you can call this as A or 1. This will become your leading diagonal. This will become your A, B, C up move for B or 2, and then there will be the leg down for C or 3. So that's, I think, rather very clear. On a shorter time frame perspective, this move is suggesting to me, this last part, that at least a small down leg is remaining, if not a bigger one. By that, what I mean is that in the next session, we can expect the market to go at least lower than this last low on the CFD chart. What is it? 43.78. Does not hold much relevance from a trading perspective unless you already have short positions in this market. But I just wanted to point it out. So expounding upon the analysis we have, so the main view, or one of the views, let's just call it H1. What we have in H1 is expectations of three waves. A, B, C. Let's just say could be 1 to 3. Expectation is as a diagonal. Right. The thing is that even though this B is complete, looking complete, it is possible that it decides to continue itself as a complex correction Right now, what we are seeing in the B is a simple ABC of a lower degree. So for those of you not much familiar with the Elliott wave, again, an ABC is a flat correction, three waves. Sorry, we are taking this as a zigzag. So five waves to the upside, three waves to the downside, and again five waves to the upside. So this is your five waves to the upside as a diagonal formation. Diagonal inside, diagonal, too many diagonals. So anyways, that's your A correction for an A, B, C. Very weird correction, because this C has gone only a few pips lower than the A dot A there is, but it completes all the requirements. And then the next leg up for the C. I hope it's not getting confusing. So if the B is complete here, then obviously we expect downside. But as I said, there is no confirmation here that the B is complete. So there is one possibility which I'll discuss. Let me discuss this, David, and then I'll take your comment. So the one possibility that remains is that maybe this market will give another three legs up before falling. So we just have to keep it in the back of our mind. So from a swing perspective, we are expecting sell off in this market, but the possibility of B continuation is there and is not relegated right now. So let me see what David is saying. What if is the bottom of the market? Let's see if it's the bottom of the market. I think I have it as second hypothesis. Let's just check very quickly. Where is it? Yeah, there it is. So in this hypothesis, this is the second review, hypo 2. Here I'm assuming that this is the first leg down, second leg up, and third leg down, right? So in that case, we can assume that this is the end of the whole move, right? That is a possibility here. If the correction is complete, we can most likely call it a WXY. The problem I have with this count is that the Y is generally, not generally we want to see the Y a little bit lower. Like if it had gone till here, then I would have been much happier calling it the completion. So since it did not go much lower, as a matter of fact, if I remove everything, you will find, one second, this is the last law of W, right? So you will find that it did go lower, but it was not really able to sustain there. So that leads me to believe that the possibility of downside continuation is remaining. There are some other biases I have, which are something I cannot discuss in a public webinar like this. They will become sort of what you call proprietary strategies. So from what I can see here, I believe that we should not relegate the possibility of continuation to the downside right now. Also, one more interesting fact, possible continuation of X. Yes, Pradeep, that's possible continuation of X is there. So we are going to, we were going to discuss this as to, yeah, there it is. Possible continuation of X, W is here, this is the X, and there, you know what, let me remove everything. W is here, this is the X, and there will be a Y. So that is also pointing down. But I was trying to make a point. Yeah, the point was that SPX is the index. So if the index really is bearish, then we will be seeing bearish setups on a lot of stocks. And I did check stocks. Apple was looking bearish. Roku was looking bearish. PayPal was looking severely bearish. So generally, when you do trading in the stock market, you don't want to rely on just the index. Generally, you don't even trade the index for the sake of trading just the index. When the index is looking weak, a better strategy is to find the weakest stock and sell it. So if the stocks are looking weak, then it confirms the fact that possibly the index is also weak. So vice versa, this strategy holds, and that basically means that I should keep my short bias for now. Makes sense, guys? It's basically called top-down approach in the technical analysis world. Yes, David is typing. What about you, Harold? And connection is not good. Somebody is saying on trading view. So guys, are you able to watch the stream in the private webinar perfectly fine? Because somebody on trading view is saying that the connection is not good. So what's the case here? That's why the QQQ are even weaker, David is saying. Yes, David, you got the point. So Deep is saying yes, not sure. What about you, David and Harold? Are you able to get this video and audio perfectly fine here in the stream? Is it an isolated issue for this user, or is trading view really bad? I can see YouTube is delaying my stream a lot. Everything is good from my side. Harold is saying perfect. So video is excellent. So I think that's means it might be an isolated issue. We'll check it later on if I need to re-upload or something for trading view audience. So anyways, another reason for getting subscribed to the emailing list and joining the webinars privately. So anyways, now that we have expounded on why I expect this market's bearish view as a main view and not the bullish view as the main view, now it's time to discuss the trade setups a little bit, right? If there are any clear setups. So first of all, as I said, I am more interested in seeing some sell-off in this market. I will not go and sell off the SPX directly. As I said, check out the charts of PayPal, Roku. Roku has been exceptionally bearish. As a matter of fact, we were able to catch 25-30% down moves on Roku. I think 2 times plus. 2 times I remember very clearly. We were able to catch many big downside moves. It has been in a exceptionally big down move for a long time. Roku is bearish, PayPal is bearish, and Apple is semi-bearish. Not a very big downside we are expecting, but we are expecting some downside in the near future. So check them in your own time. And as I sometimes say, I will repeat again myself. Generally, that's the way you want to trade the indexes. You get a view from the index, you apply it on the stocks. Basically, you get the view from the index, then you apply it on the sectoral index, and then the sectoral index, you find which one is weak. For instance, if we think that SPX is weak, which is the index here, then we find the index in the sectors, which is the weakest. And then we find the stocks, which we think are the weakest, right? So some work you have to do here, right? But it gives you the best approach. So getting back to the actual index chart, as I said, my view is that short term wise, I expect this market to fall. In the next session, I'm expecting some down move, even if it's not big, some down move I'm expecting. Overall, as I said, the view is that this is a diagonal structure correction and a diagonal, but keeping in mind the other approach, or not approach, the other view was that that diagonal is there, but this is a WXY. So in that case, we can have one more up leg. So you do keep in mind that, right? So these are the two possibilities we discussed. And one more fact I would like to point out, if you do apply the top down approach a lot, you will realize quite soon enough that if you are able to spot the weakest stock in the weakest sector, then even if the market is reversing, it will continue the downfall for a while. So in a sense, the index will act as sort of an indicator for you to get out by giving the upside signal before the stock itself. Again, these are things you cannot just learn by me saying. These are things I will have to show case studies in depth. So that is not the objective of these webinars, but just keep this in mind. This is an exceptionally important point. I generally only discuss these kind of things in private meetings of how to use the index as an indicator for your stock entries and whatnot. But if you get the concept, you can apply it. You are traders, right? I mean, if you are having some experience, if you are complete beginners, then leave it, I believe. That's it for SPX, right? Let me check the other possibilities very quickly. WXY. Yeah, that is also suggesting down. Even if it's a WXY, it's suggestive of a down move. So nothing to really add on here. Let me know, guys, if you are able to understand these concepts which I just expounded upon. Type in clear if they were clear. Also, I discussed some side concepts. Did you find them interesting? Did you already know them? That will be a good feedback, because I know this audience is sort of experience which I get in the private webinars. We are good, David. Again, any feedback on the additional concepts I discussed, top down and whatnot? Yeah, Pradeep did. Yeah, Pradeep is in the private training program, so obviously we went over all this in lot details. Harold is saying clear. I understand, Elliott. Yep. But the points I was making were not really Elliott Wave points. They were like more of how to trade price action, or let's say technical analysis points. David is still typing something. Relative. Yes. Yes, Pradeep. That's the right word for it. Yeah, before I move on to the next chart, and while David is typing, we'll wait for him to complete. Just one thing, if you guys have purchased the book, Think with the Markets, make sure you go through it and leave an honest feedback on Amazon, because this is my first book, so feedbacks are required. By the way, all the links on Amazon are here. And you can just type in ASIN and this number, so it will show up in your country's Amazon. So as I said, it is extremely important that you leave a detailed review, not just some star rating. Obviously, leave an honest review and great detailed review of how the book was it helpful to you or not, and in great detail. That helps keeping the book above in the Amazon search. Otherwise, it can disappear in the sea of books that are available on Amazon. Even though there are not very many books on Elliott Wave, and specifically the topic I have written, there is no book on it at all. The topics I cover in Elliott Wave in this book. And again, before we move further, I'll just make a quick announcement. Where is that? Yeah. So the profits revealed webinar will be I'll be showing off how much was the profit for the last financial year, which is written over here already. You can see, and how I was able to achieve it. Some strategic points on some of the main trades with financial statements and everything. I'll be discussing this on next Saturday, 23rd April, same time, 7 p.m. IST, 9:30 a.m. EST, and 2:30 BST. So this will be an exclusive live only webinar. There will be no recording available. I don't want my financial records flowing all over the internet. So if you are watching this as a recording later on YouTube or TradingView or FX Street, then make sure you go to this link 50hours.com/profits revealed 2022. I'll quickly post that in the comment section as well. And make sure you register so that you can get the invite for this private exclusive webinar. And again, as I want to make it very clear, it is live only. So this is only a one-time opportunity, one time and one time only. So that is one thing I wanted to cover. I should probably cover it near the end of the webinar. But anyways, getting back to what we were discussing, what were we discussing? We had covered SPX, we had covered some out of some analysis other than Elliott Wave. We want to check BTC at this point, and BTC is becoming more and more complex as the days go by. I think that's also the title of a song. It's a country song. I don't remember the singer's name right now. Days go by, I can see it flying out the window in the wind, something like this were the lyrics. So again, I'm getting a little bit off topic here. For some reason, I can't find the lyrics even on Google search. Anyways, leaving it. So as I was saying, BTC, the analysis is getting more and more complex. Last time, we were of the view that this is possibly a diagonal, right? But what really we want in a diagonal is a 5-way progression. But this, as you can see, never really went. I mean, as even if you consider this as the thing, whatever the wave force position is, we expect a wave fifth, which is generally lower than the 3, right? Waves, what do you call, progression in a diagonal is very, 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 very rarely failed fifth. That is to say, if we were to consider this as the 4, this as the 5th, then it has happened. I have seen it once on Nasdaq chart, but as I said, it is exceptionally rare. It is so rare that I have very few examples of it. So if we do go on to take this as the count, then this is a very low probability count, and the chances that it is wrong is very high. So let me just check, and last top still be considered as a wave 4. Technically, it is still lower than wave 2. If you take this as a wave 4 is the question from Prabdeep. So yes, technically, and in Elliott Wave terminologies, it can be considered a wave 4, but, and a big but, there is a guideline which is almost never really talked about in the word of Elliott Wave. It is called the, not almost never really, rarely talked about, I should say, proper wordings required there. It's called the guideline of right look. If you have read Elliott's original book, Nature's Law, Secret of the Universe, and the second book or the first book, which was, I think, Elliott Wave Principles, something. I have it lying around somewhere. Anyways, if you have read his original publications, which are very, very small, by the way, he talks about this guideline of right look, and he basically says that if something does not look right, then it probably isn't right. So in this case, while you can technically say it's a diagonal, the difference between 2 and 4 highs is rather very small. So this is not looking right. Generally, you don't want the gap to be this small. So based on the guideline of right look, I am of the view that we should consider this analysis as low probability. It is definitely not something we can relegate, but we should consider this as a low probability count, right? Getting back to the analysis I have, I believe this is getting more and more complex. No matter how much I discuss here, there's a heavy chance that something new will happen here. So instead of going into too much detail, I'll just discuss the main theories from a shorter time frame perspective. Because if I were to discuss the larger time frame, it will be from this point of reference, and this has multi variations. Like even on this chart, on this part, I have like 4 variations for this part. So I cannot discuss that much. We are already near the 1 hour mark. It will take 40 minutes or something to discuss all those. So I'll discuss the main theme, which we can check out here. And one more point before I move with the main theme here is that if the analysis is that complex, you are better off leaving it. Leave the market for a while, trade something else. There are thousands of instruments which are traded, right? Don't put your life on one instrument, or life savings, or life's money, whatever. So anyways, so what I think is, if we take this as our point of reference, again, as I said, I'm ignoring a lot of the price action here because of the complexities it is having. So if we take this point of reference, the most clear analysis that I see is that this is possibly a 3 waves up, that is to say A up, B down, and C up. So in Elliott wave terminology, 3 waves up. We are expecting a sort of flat here. Then flat will again have 3 waves down, or even if it's a WXY, let's just go with the WXY, it's much easier. So 3 waves up is what we'll call a W. Then there's a 3 wave correction, which we'll be calling an X, right? So this is your 3 wave correction, which we can call an X. And there could be another correction for the up for a Y. So that's one probability, right? This is suggesting upside. But if you think about it from a technical perspective, X can also be taken here. And if X is taken here, then you can see that the 3 legs up are already complete. So it is also having a bearishness. And the fact that it is a corrective structure, basically what I'm trying to say is the fact that this point from here to here looks more like a 3 wave up rather than a 5 wave up is suggesting that we should remain bearish right now until there is evidence suggesting that it is doing something else. So basically my point is, unless this market gives a very clear signal for the upside, I will avoid taking longs on it, and I will take shorts on related pairs which are showing bearishness. I think we are covering 6-7 of them. I remember, I think Luna was the one which was the most bullish, and there was Cardano, I think, or something else which we were tracking. I think Pradeep can tell me which was the one we were discussing yesterday, which was the most bearish. So again, as I said, leave Bitcoin itself, go to the altcoins. There are some which are much more clear and much more bearish, and the bias remains bearish. Yeah, Link we were discussing yesterday in our private, what do you call it, classes. Link right? Yeah, link was the bearish one, I think. So check those out and strategize accordingly. So for BTC, I will say leave for now. Bias, bearish, analysis, complex. Okay. So yeah, link is the bearish one, which we are expecting some more bearishness comparatively. So let's see what else. I think that is enough analysis for BTC. ADA, I think we are analyzing ADA, but we did not check it recently. Like we haven't checked it for a week, so I will not comment on it for now. But David, I think he obviously knows what he's talking about. So next is Nifty. Nifty is generally following the price action from what do you call S&P's 500. Generally, I correlate it a lot with SPX. In this particular case, it is unclear, a little bit more unclear than SPX, and the reason is that first we have two analyses. If we go with this one, this is suggestive of a ABC. Then it is showing some resistance here at the trend line. I mean, everybody can see that it's not a very new thing. So basically, above this trend line, price action suggests longs, and above this trend line also suggests that C is complete here, done, right? So that's one view. That is, wait for the trend line to clearly be broken, then the market to take support on it, and then expect longs. That's a very far-fetched story. Second, less far-fetched story is that this is the A, B, and C. I think I discussed this in the last webinar. And this is the C. This is continuing. So again, this will be a long analysis. Nothing changed, right? We still expect upside here. I think the more important one is the bearish one. So the bearish one is, this is the A, but the B is still only till here, and it is still very unclear analysis. It is possible that the B is still continuing is what I expect. So if the B is continuing, then I expect it to continue as a possible triangle. A, B, C, D, E, and then a down move. And this is not relegated right now, because if you look at this point, which is the point of reference 15686 level something, POR 15686 something level, then you will observe, if you remove everything, that this market is definitely looking more like A up, B down, and C up. Because of this one simple fact, we cannot relegate the bearish side right now. And hence we will have to, what do you call, keep the bearish view in mind and no longs until we break out the last high here, right? And I mean, not even the last high, the trend line here. So from a shorter term perspective, again, I'm thinking that in the next session, we are going to see some short term fall here, right? And that's my view. Again, same things apply as everything else. We will look more for a selling opportunity in the related stocks, that the Nifty50 stocks we have, rather than just the index. There we will most likely have a much better opportunity. Okay, so that's our analysis for Nifty50. So we have at this point covered everything: crude oil, gold, SPX, BTC, and Nifty50. And at this point, I would like to again emphasize on let's say three things. First of all, if you want to become part of these private webinars, you can receive invites for them by subscribing to the mailing list. Go to 50eyes.com/subscribe-emailing-list, or just go to 50eyes.com and click on this link, email subscription. Second, and the thing about my book, if you have not already gotten a hand of it on it, it is currently only available in electronic format. So you will be receiving it on your Kindle instantly. Just after you buy, just after that, you can download the book on your Kindle and read it on your phone, tablet, computer. So check this out, Think with the Markets, my latest book on the proprietary work I've done over the years and how I look at the markets. Some of my proprietary work, obviously not everything. You can find the links for the countries here, or you can just type in this ASIN code or the book name itself, Think with the Markets, in your Amazon website of your country. I want the you guys who are my regular audience to leave a detailed review, an honest review, obviously, of what you think of the book. It is exceptionally important because I'm planning to launch series of books on this subject matter. So the first book should have some visibility, right? And lastly, most importantly, I'll be conducting the exclusive live only. That is, no recordings will be available for this webinar, Profits Revealed Webinar 2022. We'll be showing off how I was able to achieve this much profits, as you can see on the screen, exceptionally high number with profit statements and everything. And I'll show off some of the main things that I did to keep the profit at such a high level. It is, as I said, live only. So the registration link is 50s.com// profits reveal 2022. Make sure to share this link with your folks who are into trading, right? That's about it. Other services and whatnot I have, you can check on my website yourselves. I don't want to market too much. The important things I've already covered. Right. So let me know, you guys, if you have anything else to discuss here, any chart which we discussed. If you had any doubts, we can take it here. Or if not, then just tell me what was your experience today. Did you learn some important concepts or some important ways to look into these particular charts of crude, gold, SPX, Bitcoin, and Nifty, or what? And then we will close the webinar, obviously. I see David is typing something. I'll wait for him to complete. What about you, Pradeep? You are still there. Very weirdly, we did not have any views from the audience on TradingView. Okay, Madhavji was live on YouTube. I just saw the message. You should have joined the private thing. What was the book called? Yeah, so the book is, there it is. Think with the Markets is the name of the book. I think it's pretty rememberable title, or memorable, whatever is the right word, right? Secrets to achieve 80% plus accuracy using Elliott waves. David is saying, thank you, Mirav. I will read your book today. Was good. Okay, David, thank you for joining in the webinar. Okay, so yeah, obviously, I still have to add this page of the exclusive private webinar I did on the book. But for those of you who are currently watching this recording or live here, you can check out the private webinar on the book by visiting the book page on website. Anyways, I'll add it in the book itself. I'm just getting a little bit too busy these days. So that's about it, guys. Thank you for joining in, and hopefully I'll see you in the next one with much bigger audience. Thank you again. Bye.